Figuring out the right investment for your needs is not exactly an easy job. I mean, there are so many investments out there, and how do you know what to choose for what time frame? Hi there, I'm Rin Agarwal. I'm a financial educator helping people achieve financial independence. Welcome to the Financial Independence vlog, Marin Talks. In vlog 26, I'm going to be telling you where you can invest for the short term. I receive so many queries from people on how do they manage their investments, especially now with the fixed deposit rates going down. And I was checking the rates and I was so surprised to know that the 6 month fixed deposit rate on a nationalized bank is like 3.9%. I mean, in my entire 25-year career, I cannot imagine these sort of rates on fixed deposits. And I kept thinking, my God, it's like things are just going so bad. Like, how do people actually invest their money with rates at 3.9%, right? Now, of course, there are other options that you have. You can look at the small finance banks because when I see the small finance banks, then the rates over there are much higher, like 5 to 6%. So maybe, for a part of the money, which is maybe up to 5 lakh rupees, since that's what the deposit insurance is, you might want to look at investing in small finance banks. Of course, I'd like to caution you against things like, chit funds, or if you're looking at doing company deposits and stuff like that, I would still not go in for those sort of investments because you don't know if the money would get stuck out there, when you would get your money back. And really, as an investor, it's so difficult to figure out what the financial health of a company is. Now, other than that, if you are looking at investing for 3 to 6 months, one of the other options that you have available are mutual funds. And within the mutual fund space, you have debt funds which are available. Uh, Within the debt funds category, and many of you might have seen my earlier vlog on the types of debt funds. So, within the debt funds category, you do have overnight funds, which basically invest in bonds which are going to mature in a day. And there's absolutely no risk in these investments. Of course, no risk means lower returns, which means that the typical return that I'm seeing right now from an overnight fund is around 3%. Next, you do have liquid funds which have bonds which can mature in up to 91 days. So liquid funds is a good option if you're looking at a 1 or a 2 month investment. And if we were to look at the liquid fund returns, they're anywhere between 3 and 3.75%, depending upon the fund that you actually go in for. Again, as far as liquid funds are concerned, I would say that just go in with the bigger funds. The more stable funds is what I would actually recommend. If your investment period is slightly longer, which means that if it is, let's say, 6 months or so, if we were to look at a bank deposit, as I said, the return is about 3.9%. Now, you do have an option to look at an ultra short term debt fund. Why would you look at it? Well, simply because it's giving you a higher return. Probably it's giving you like a 25% higher return. So as I said, that if a 6 month FD is giving you around 4%, a short term, ultra short term debt fund can give you around 5% or so is what is the return right now. As far as taxation is concerned, it's the same whether you choose fixed deposits or you choose any debt fund and hold it for less than 3 years. It's going to be taxed as per your tax slab. So if you are in the 20% slab, you pay 20% tax on the gains. If you're in the 30% slab, then you pay 30% tax on the gains or the interest, as the case might be. Couple of other things that you need to look at when you're considering investing for short term. Some of you might remember the Templeton incident that had happened a couple of months back, where one of the ultra short term bond schemes from that fund house was also wound up. So do not just choose your fund blindly. Please do check the credit quality of the fund. If you find a particular fund in any of these categories, which is giving a much higher return than what the rest of the funds are giving you, then I think that's a huge red flag for you to actually stay away, because what it actually means is that they have invested in some lower rated paper in order to generate a higher return. Of course, if you're confused, you can always refer to my website, and I've given the link down here for you to check what are the ultra short term or liquid funds or overnight fund that you could look at investing under. So, finally, Rinse tip on investing for the short term. Well, you can choose in the FDs, the small finance banks, but before you invest in them, look at the capital adequacy and the gross NPA. If you're very confused about all of this, then ensure that you don't keep more than 5 lakh rupees in a particular bank, because up to 5 lakh rupees is insured in any bank. Alternative investments that are available are liquid funds and ultra short term funds. But before you invest in these, do your homework right. Ensure you get into funds which have good credit quality, and the larger, more consistently performing, stable funds that exist. Make sure you check out our other videos on in trending topics. Do write into us with your feedback. Till then, cheers.